Trading Market Technicals morning call video for Tuesday, August 27th. Tough talk out of the U.S. on serious chemical weapons being used sends the Dow down. Late day sell-off on actually all the markets. Dow down 64. NASDAQ actually had a nice reversal, but didn't do much damage, down 22 cents. S&P down 6.5, and Russell actually held positive into the close, up 22 cents. Now, this could be a catalyst of what we were looking for, and I said, we're going to need some sort of a catalyst to send the markets lower. Now, again, it is only talk, but it's all we need is to get this markets to move lower. And remember, we are the last week of August. A lot of bigger players are gone, so you're going to have markets that move to extreme. So as a trader, you're going to need to be extremely nimble if, in fact, you are looking to trade the rest of this week. Now, it's not just this week, though. It's really going to prepare us going into September. It's really what I'm looking forward is September. And I did say that I'm looking for some volatility to pick up, and we're getting it now. We're starting to really trickle in here. Now, there's going to be a fear trade going on. There's going to be some gold and an oil trade, obviously. And then, of course, equities would start to probably lose its luster to the upside, and maybe we do get that additional sell-off that we're looking for. But it's going to be interesting to see what comes out of what happens with Syria. And remember, this is exactly what we look at. Markets need a catalyst, whether it be positive and or negative. And the negative part of it is possibly going to war with Syria. Now, I don't think that would happen immediately, right away. But the thing is, you need to be aware of what you're doing during the course of the trading day, because this could be a big factor in your trading plan. And, of course, your big selection of stocks. You want to also take advantage of what's happening as well. Now, as we talked about the Fed tapering, I start seeing a lot of the emerging markets, and I look at the Forex markets highly because it's a great indicator, even if you don't trade it, to see what's going around. So a lot of the emerging markets are starting to decouple here, and you can see what's happening in the Indian rupee. Okay, if you look at that, their currency is getting slaughtered, and that's a sign to say that this is what is going to happen in a lot of these other currencies and some of these majors. When this does happen and they start to decouple the Fed trade, you're going to see a lot of big movement in the currency markets as well as equities. So it's something just to keep an eye on. I just wanted to bring that thought to you. But if you look at the emerging markets, and I'm going to show you that in the EEM, they've really been taking a hit hard. And you really need the emerging markets to follow suit. Now, if you look at the emerging markets, you're going to also look at a lot of the commodities will get hit as well. So that's something to keep an eye on in the coming weeks, just to kind of keep an eye on and keep abreast of what's happening. And also there is possibly a trade there. So let's just take a look at what we have here. We had a nice little move up in the bullish percent SPX. And now, as of today, well, we're down, we're down about 2.5 now in the pre-market. But obviously things could change before the opening. So it looks like we might get some further weakness going into this morning. But if that's the case, then the bullish percent will just kind of roll back over again. And really, this is in no man's land here. As you can see, we did move up here. I like to see it get down to, anywhere from the 50 to 60, 70 area in here, and then possibly look to buy it. And then if you look at that area, will come in around 1560. Now, this is my ultimate target in the downside correction. I don't see it really getting that far. Unless obviously something really big happens, overseas. But I don't see this happening at this moment. I'm really looking for the June lows coming into this area here. That is the June lows. I'm looking for this area here. That would be the max. But 1600 would probably be around a good round lot psychological number where the market would, I guess, would at least pause for the moment, and then we would reevaluate it. Take a look at the tick. Tick's still above zero, end of day tick now, this reading. So it's still constructive, but again, we want to make sure that we want to hold this. Even on the move lower, if the tick can maintain, negative 100 to zero, that's going to be good because you're going to have some good strength in the tick, end of day tick, telling me that, hey, this is just a minor pullback here. So something to keep an eye on. Just showing you little things that I like looking at while the markets start to move lower. Now, here's the VIX. The VIX actually never got that far down to the 12-13 area to get down below the Bollinger Band. but it's holding in this cluster area of support. We got the 50 and the 200 day, the 20 is right up in here, and then you got the 8 right in there as well. So let's see if this if the VIX can push higher. Now remember, you always have that VIX trade. If we can really get a big push higher and get something like a long-legged doji like we have here, and then reverse, you can actually sell the VIX. For a move higher in equities. Again, just a thought, but I wanted to show you that we have a little bit of fear that we're creeping in. Nothing big. The CBOE put-call ratio was ended up again neutral, so that tells me there's not enough fear in the markets right now. But we did get some profit taking yesterday, and again, remember, guys, there's a lot of people that are out, a lot of traders, investors that are gone for the rest of this week, and pretty much most of next week. So the next 10 days are going to be a little wishy-washy, but there are trades to be had. Remember, it's a shame that the sell-off came at the end of the day, because you wouldn't have time to really get to really start your trading unless you just close your eyes and short the market, and that's not what we do. We look for valid setups, and by the time that took place, the markets were closed already. Okay, so let's take a look at the stocks. Remember I mentioned the semiconductor? Well, this is starting to break down, and a lot of people they keep talking about the semis, and I think the technology sector is a great sector to get into. Once you get a little bit of a pullback here. So you got to keep an eye on this, but if you look at it, we have this confluence area of support which has been breached. We have the long-term uptrend line from the November 2012 lows. That's been breached. Now we're back testing this. So to me, I think that you can really manage this trade well if you're looking to short the semiconductor. Go into that sector, look at the weakest one, and look for an entry to short it. And that's the way to do it. Look at our ratio. Still lower below that trend line. So this is something that I'm going to be watching in the coming days and weeks as well for a short entry in the semiconductors, at least for a pullback, okay? At least for a pullback. All right, take a look at the emerging markets. And as mentioned about the emerging markets here, this is just literally breaking down. We just had a little bit of a bounce from the June lows, and now we're starting to roll over again. So this is something that you really need to watch. There's an ETF of the EM, the emerging markets. Very easy to look out for, but this is something that you don't want to see if you're a bull. But if you are looking to trade some commodity stocks or ETFs, keep an eye on this too. This is going to give you some clues that you're probably headed lower. Take a look at the gold trade. Now, the gold trade got a little bit of a bid yesterday because of the fear trade, right? So what do they do? They go into gold, and of course they're going to go into oil if we are going into an oil-producing nation. So this is something here that I am going to be looking for. Now, I am not looking to buy gold. I'm looking to short gold. Yes, I am looking to short gold. Obviously, depends on how big the conflict is or will be, right? We don't even know if that's going to happen. I am still looking for a 14, 16-ish area right into this cluster. Now, if we start breaking out any higher, I'm going to hold off here. I'm not looking for a touch and then just short it. I need a trigger. So if we continue to move higher, I'm just not going to short it. I'm going to wait for this market to actually pause and start to roll back down again. And if that happens, whether it be at 1460 or 1490 or even the 200-day moving average, this would be even a better short for me. So I'm looking to short gold, and if it doesn't happen for 2 or 3 weeks or a month, so be it. But that's the area I'm looking for, and I don't think gold has bottomed. I do think gold goes down one more time, and I'd be a better buyer way in here, 1,000 to 1,100, right up in this area. That's the gold trade. Take a look at WTI. Now, this gets interesting. Okay. Now, I've been talking about that we have just been consolidating sideways at the upper end of this range, which is bullish, right? If we break out of this area here, if we break out and hold, this will be a good trade to the long side, okay, to at least a 111 in oil, in crude. I like to prefer it to see it get down to this area here at 102, possibly even par. Maybe even lower if it can get there, but I don't think that's going to happen because you're going to have a war premium start being built in to this crude oil, if not so already. So just keep an eye on this. Now let's take a look at some of the other charts I was looking at. Now here's the USO. Now as you can see here, we have this gap area of resistance, which is holding pretty much most of July and all of August. So this is the area that I'm looking for it to start breaking higher. Once that breaks higher, guys, you're going to have a test of the 40 and then probably 40, 41, 42 area. And this is a USO now, okay? This is where a lot of the retail guys can trade oil via the ETF. Now this is where I'm going to be watching really closely, because if that's the case, you can go and buy out of the money call options in USO for a longer term hold for 3-4 months. And then remember, crude oil seasonality is coming into strength up until about October-ish, November, and then after, when you get that hurricane season that's kind of unwinding right in October, November, that's when crude oil takes a little bit of a step back, going back into the fall again, into the early spring, excuse me. So we are into some seasonal strength here. So this is something that I want to take advantage of in the coming days and weeks. Now, here's the GLD, which is the ETF. Remember when we said we had an inverted head and shoulders pattern. Now, the target measures to 150. I don't think, to be quite honest with you, that we're going to get there. Right? There's the measured move. I don't think we're going to really get there. It's possible that this conflict could really start to take off and everybody look to buy gold again. But I don't think, I think if at the very least you probably maybe tap the 200-day moving average. And then we would reevaluate. But still, bullish formation, inverted head and shoulders, triggered, broke the slanted neckline, and now we're moving higher. So I am not looking to short it at this time, but I'd like to see this area here, possibly this gap area gets filled. Now we are just getting into the gap area here, as you can see. So a look in this gap fill area, and then we will look to reevaluate and see clues of shorting gold, which would be via the GLD. All right, and here's the spiders. Now we had outside day. We had reversal day, reversal candles in pretty much all of the 5 sectors that we follow. Take a look at the spiders. We just broke down here. Now, we didn't take out Friday's low, but this is a concern now that if we start to take out this low here, which would be last week's low on 822, 164, call it rounded out 64, then I really think you're going to probably get into this area here, a 159, and then, of course, the June 24th low of 155.65, which coincides nicely with the 200-day moving average. Now, don't forget, by the time it does get down there, the 200-day will continue to move higher, so it would probably catch that 200-day before the June 24th lows. Here is the 30-minute with the Bollinger Band. I mentioned that the Bollinger Bands were pinching. It's a shame that we had the last sell-off at the end of the day. But let's see what happens here, because we could get some some further downside movement going into the end of the week here. It's a 30-minute chart. Here is the diamonds, as you can see, really reversal. I mean, the diamonds really got hit pretty hard, and that's something that I'm going to be looking for, because this is the weakest of the 5 that we follow for continued downside movement of the diamonds, which would be the Dow, obviously. Transports actually held up pretty good. They really didn't sell off as much. They're still holding at the upper end of the range and holding this long-term uptrend line from the November 2012 lows. So this is actually holding up well. That's one positive in the sectors. Also, the IWMs, they actually closed positive, as you know, and they're holding true here. So the 2 leaders are doing its job, holding the market up. If they start to break down today, watch that, guys. If they start to break down today, and you're going to have intraday tick readings below 0, that it's going to be reading 600 plus to the downside, then you got to say to yourself, look, we got some real selling here, and there's some sell programs going to start hitting the tape. Then I would be really, really careful with your longs if you're holding long positions. If you are going to hold them, I would be looking to buy some protection here. And here is the SMH, which is the semiconductor ETF. As you can see here, that really same thing. The only thing is the SMH still holding true to that that long-term uptrend line from the 2012 lows. You can see that here from November. So this ETF is holding up better than the semiconductor, the SOX. And lastly, we have Goldman Sachs. So Goldman broke out of this bullish fallen wedge and actually broke back in it again. So that is actually not a good sign that the banks may be having some pressure and maybe continuing its selling. Here's the XLF, as you can see here, breaking down again. So this pivotal area here, this pivotal low of 1970 is going to need to hold. If that doesn't hold, you're going to take that 2012 uptrend line and then possibly lower to the 200-day if this gets out of hand to the downside. Now, again, guys, remember, the media is made to talk up and down the market. They put their fear in everybody's mind. So, I think it's far from immediately going into war with Syria. But again, all you need is the talk and some sort of a catalyst, and that could get the markets humming either way. but there's going to be plenty of opportunity. And like I said, I do believe volatility is picking up, and it is. And I'm surprised that it actually this week Monday we had we had some real nice movement. Other than the fact of Kerry on his speech. The markets were so quiet yesterday. They were very, very quiet. I was looking, well, that's probably going to be it for the rest of the week. And sure enough, now we possibly have some decent trading to do. So Apple reversal from the 509. Remember, this area needed to hold the 504 or a breach of the 498. Then you're going to see this this area here, the 486. So right now it did not hold, but it is holding the low of the 498. So that's going to need to hold. Watch that area. And if that does not hold, then look for a fade into the 485 area, 486, and that's Apple. Q's nasty top and tail here. Same thing, guys. I think if the market sells off, I think everything's going to sell off. So I would use caution. Be really nimble in your trading. Be very selective in your trading if you are day trading. And if you're holding some long positions, I'd be looking to buy some protection because you never know. You can wake up one night, we had an airstrike on Syria, and next thing you know it, the markets are down, 20, 30 handles, and you could wipe out a lot of your gains. So be very, very careful the next couple of weeks, especially when you have light trading. Have a great day, everybody. We'll speak to you tomorrow. Take care.